Hey guys, Mike here. So today we're going to talk about SoFi stock news that came out, and obviously, we're going to look at the chart because SoFi is kind of lagging, right, when it comes to moving up. As the market's moved up, as other stocks have moved up, high growth stocks moved up 20, 30, 40%. SoFi is still not getting above that $10 mark, which I've talked about is crucial for them. And, obviously the CEO has been coming on, he's doing the rounds, right? He's been doing the rounds, doing interviews, and he made a couple comments, one that I think everybody understands he's being the CEO and he's trying to put a positive face out there. The other one was he mentioned something, and people kind of took a step back, and it was all over Twitter and everything else saying, whoa. If that's true, we may have a problem. And so, I'm going to go into what that was and everything, and then just go over some good news, right, of what the company's been doing, because there has been news on SoFi and the expansion and things like that they've been doing. And so that's a good thing. So, before we get in there, I do want to say, obviously, if you're already not a member, make sure you sign up for the Daily Upside right there. Click down in the description down below. Click on it, put your email in, hit submit, and you'll get articles like this right here, which I just got Friday. And you can see right here, detailed articles on what's going on around the globe, around here and locally, what's going on in the stock market. And so, you get nothing like it. I really enjoy it, and it helps me come up with good ideas for videos and keeps me up to date all the time. And a lot of the members really like it. So, it's completely free. Just hit the link, put your email in, hit submit. That's it. Completely free. You got nothing to lose, and you get really, really, really good articles, okay, to keep up with what's going on. So anyway, if you get anything out of this, hit the like and subscribe button. I really appreciate it. And we're going to start off with the chart, and I'm going to show you exactly what's happening and why, SoFi is just lumped into a group of other stocks that it just can't break away from. And I was looking at SoFi. It came off that bottom when the market turned right there. Nice little run up, and then it just, pretty much just fizzled out. Started selling back down again, could not break over $10, which is key because that's what it obviously came public for, being a SPAC, $10. And you can see it's almost down like 10% over the last 9 days. And so, while other stocks are actually up. And, if we kind of zoom in here, you can see it got rejected off the 25 EMA right there. And so it hadn't even captured the 25 EMA, let alone its 50 EMA. And so, that's something to be looking at right there. And then if we just go over here, here's the problem. Here's all your fintechs, right? And you can see they all move exactly the same. If you look at all those, the charts are almost identical, right? And so, if you look at Square, since the big move, it's up 22%, PayPal is 18%, Lending Club's 8%, SoFi is actually down. Upstart's down about 2.21% since they started making the move up in the market. And then if we go ahead and zoom into the last 5 days, you can see right here the QQQ itself is actually positive, and the whole index is 2.5% up. Yes, these high growth stocks, which should be up, but because they're fintech and they are like radioactive or something, you got PayPal down in the same time frame, 3%, Lending Club down almost 4%, Square's down 5%, SoFi's down 8.5% in the last 5 days. Upstart got crushed. It's down almost 19% just over the last 5 days. And what really sucks about that situation is the fact that I can't find like two fintechs that are really comparing apples to apples, right? Like traditional banks, you can compare. Wells Fargo, Citi, Bank of America, all these other ones. You can kind of compare them and say, yeah, they're really similar in a whole lot of ways. But these fintechs just aren't. Square, PayPal, Upstart, a lot. It's just there's so many different types of services. Some have crypto, some don't. Some let you trade stocks, some don't. Some just do lending, and that's it, right? And so, but SoFi is trying to be that one-stop shop. But it has the label fintech, so guess what? Boom, it gets labeled right, lumped right in with them. So as they move, that's how it's going to go. It doesn't matter what the market's doing, unfortunately. And so that's just something we got to deal with. But one anchor that is weighing around SoFi's neck that probably isn't weighing around the others is what's going on with student loans right now. And all you got to do is type in Google, cancel student loan news, and you start scrolling down, and you'll see it. Former Education Secretary calls for cancellation of all student loan debt. And these are, by the way, in the last 2 or 3 days here. Our higher education expert proposes a new way for Biden to cancel student loans. Biden will likely extend the student loan repayment moratorium, forgive all student loan debt. AOC tells Biden he needs to cancel student loan debt, and it goes on and on. And the big problem is, what is the market not like? Uncertainty. What are we getting out of D.C.? Uncertainty, right? The deadline is May 1st. They just say nothing. Bernie Sanders is out there, Elizabeth Warren's out there, all the big wigs, saying cancel everything, don't do it. Some are even attacking SoFi and anybody that has anything to do with student loans, like they're criminals or something, and they're thinking, you know, I don't like the interest rates, but I mean, without student loans, a lot of us, including me, you know, when I grew up poor. We didn't have parents pay for our stuff. There's no way I'd have been able to go to college without student loans, and that's the majority of America. And so, you know, there are some bad lenders out there for sure that have done some really crazy stuff. But guess what? That's the government's job to punish them, right? But in this case, they're just like, oh my God, all of them are bad. Get rid of them all. And so it's kind of crazy. I mean, but that's when, you know, the SoFi CEO came out this week and talked about it in detail. And, you know, here's a short clip of him, you know, basically saying what he kind of thinks about this and where SoFi stands.
What sort of triggered your desire to talk about this?
Yeah, first, full disclosure, SoFi is in the business of student loans, so we get impacted by this indecision. But that's not the motivation. SoFi is going to be fine either way. We had record revenue in the third quarter. We had record revenue again in the fourth quarter. We achieved over $1 billion of revenue in all of 2021 and our first full year of profitability on an EBITDA basis, all while the federal student loan program has been on hold.
And this is really important in what he's saying here, because what it allowed them to do was it really put a sense of urgency to them to branch out, right? I mean, there's what their student loan originations were back in 2019, right? They were the leading, you know, product they had. And now you see, though, it's declined dramatically because of this. But you see what also got stepped up was home loans and personal loans, right? So those actually, there's more of those now than they have the student loans. But saying they'll be just fine if, you know, they cancel all student loans. Well, that, and I'm not sure how that works. If you know how that works, let me know. But if the government decides to cancel student loans, because I've never lived through anything like that, is the government going to send SoFi the money for the balance left on, you know, what they have, $1.6 billion to pay those loans off for those students? Or how does that work? Let me know. I tried Googling it, couldn't even find it. So, you know, let me know on that. But what it'll also do is it'll take away a product, right? And so it would really hurt them in the long run, because they'll have way less. If you cancel all student loans now, is there going to be student loans in the future? Like, how is this all going to work? I don't think anybody knows. I don't know. I'm not a student loan expert, right? And so I know I have them. I've had them in the past. We need student loans for people to go to school, unless we're going to make college free now, which I don't even know if that's on the table. But, you know, the good thing about it is, like he was saying in the interview, he said, you know, the pandemic forced them to really have a sense of urgency to build the other products, right, for the home loans and the personal loans, okay? And he touches on that because this is something they're really going to be focused on. It's something they really have been focused on, which I think is going to get even better now.
We think the opportunity in front of us is enormous, even with a rising rate environment, just given the quantity of home loans, either purchased or refinancing, that are, you know, 3.7 million members already delivered. So we're really excited about the opportunity to broaden that selection. And as we broaden that selection, we'll be able to start to market much more aggressively than we have up until this point.
And this is going to be real interesting to see how they navigate this, because now you got houses are going through the roof. Now the home loan interest rates, it used to be like 2% just a year and a half ago. Now they're at 5%, touching 5% now. So are people, one, going to be able to afford houses? Two, are they going to be able to qualify? That's another thing. A lot of people's credit got wrecked during the pandemic. And so that's going to be a whole, you know, interesting thing to see, because they've been growing their home loans, but is that going to continue? Okay, so then you got the risk and uncertainty of the student loans. What's going to be going on with home loans? Then you got some big competition for theirs. A lot of companies have been around doing that a lot longer than they have. And so that's a big, huge competition. The good thing is for them, I think it was 60% of their home loan originations comes from current members who are in other products. Okay, so that does give them a good advantage. And a lot of their members are what? Young, right? So they look for those starter homes. But the one thing, did you catch what he said? And this is what worries people, and this is what kind of blew up on the internet. He said 3.7 million members that they currently serve, right? We're 1 week away from the first quarter ending, okay? He just did that interview this week. So that's a problem if that's an accurate number, and here's why. And the reason why it's a problem, because if you look at Q3 to Q4, they went from 2,937,000 to 3,460,000. So that was over 500,000 members added from that quarter. And if you look at the quarter before that, you're looking at somewhere around 377,000. Well, if we're only at 3.7 million members now, and the quarter's ending in like 5 days here, then you're looking at only adding 240,000 members. They haven't added that few members in quite a while. And the reason why it's a big deal is what I tell you a couple weeks ago. When you're in a downtrend or your stock's having trouble, everything is magnified, right? So if you only grow from fourth quarter to first quarter, the amount only half what you grew from Q3 to Q4, you know analysts are going to pounce on it, right? You're going to see downgrades across the board depending on what the numbers are. And so this is it's just something you got to look out for. It's just a magnification. If we were in an uptrend, probably nobody would think twice about it, but their member growth, which they tout a lot, is huge, right? And it's hard to keep that kind of growth going. But so hopefully he misspoke. Hopefully it's a lot more than that, 3.8, 3.9, somewhere in there right now. And so, but that was what people caught when he did the interview. I saw it blowing up. So I said, well, let me look, see what the problem is. And I kind of get what the problem is, you know. And if you go over to our friends at TipRanks, you know, we go down to analysts. There really hadn't been anything going on since the last time I did it as far as the analysts, any upgrades, downgrades, anything like that. You know, and then if we go over to insider trading, we see if the CEO's been buying anymore. And, you know, he hadn't bought any since the last time I did a video. Nobody has. It's about 9 days back. It was the last purchase anybody had made. That was an informative buy. And then we go over to news sentiment, check it out. And you can see it's at neutral. But, you know, there is actually some bullish news down here, as you can see right here. And so, you know, if I just click on the bullish news and start going through, you know, I end up coming up with the crypto news and the expansion into Mexico. And if you're looking to get TipRanks, you can get 30% off starting today till Thursday. Just hit the link down and below and take advantage of that. And you'll get to see all that good stuff right there. And that's where I got this news from, talking about SoFi launching the no-fee cryptocurrency purchases for direct deposit members. And what it's allowing them to do is automate their crypto purchases straight from their paycheck that they're getting direct deposit. That's something they're really pushing hard into going into now that they have that bank charter. And so, you know, the other one was, I got off TipRanks, Galileo accelerates Latin America growth with expansion into Colombia. And so it's just another country they get to go into and expand their footprint globally. And the reason why this is big news is because their financial services division actually loses money. So they're trying to actually turn that around where it'll be profitable now. And then, of course, you know, with the student loan part of the things, I mean, they're looking out, you know, they're missing out between $30, $35 million of revenue, right, if that happens. And so, you know, that's not nothing to shake a stick at, right? That's actually is a big deal. I know some people downplay it, but it just is. More importantly, what is the uncertainty, right? You just want them, and I think the CEO has been here multiple times saying they need to make a decision. They need to lead and figure something out. Give us some kind of answer, right? A lot of people's sentiment I get seems to be like, hey, if it wants to hang out between $7 and $10 for the next year, they'll just keep accumulating the stocks they believe in. That's the way you got to be, right? I mean, that's the way you look at it. And so the good news is I wanted to at least show you that they have expanded into housing and personal loans, and those are bigger than what their student loan originations are, even though the demand, you know, for student loan refinance actually is huge. And so, you know, that's one thing SoFi is really good at. So that will be a nice windfall for them if the administration just makes up their mind. So anyway, hope you got something out of this. You know, hit the like, subscribe button if you did. I really appreciate it. Don't forget to hit the link down below if you want to sign up for that TipRanks, 30% off from today through Thursday. Also, if you want to sign up for the Daily Upside, I'll put that down there as well for you. A lot of people really like that, and that's totally free, so can't hurt anything, right? So hope you guys have a good one, and I'll see you later.